Hi traders, this is Chris from Elite Currency with a short video on the setups of this week in the Forex market. First of all though, be aware that trading is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. By continuing watching this video and webinar, you agree with this disclaimer and you're aware of the risk involved when trading. Alright, as I said, a quick summary of the trades this week. Was an interesting week, interesting start of the new year. And well, in the Admiral Markets webinar, I was looking at a pullback on the pound USD. As you see, the trend lines here being broken, kind of a triangle bear flag pattern-ish break of the green line after a previous impulse. Prior to that, as you can see, good impulse, right? Classical impulse to the downside, then a choppy correction sideways. And then when price breaks through support, you could get a high chance of a likely bearish impulse continuation. That's what happened. And basically, I didn't take that trade, but I said to the Admiral Markets viewers, wait for a pullback, and I'm looking to take the pullback and look for a continuation. And that's the trade I took right up in here, as you can see. I waited for price action confirmation. I waited for this particular shooting star, the wick of that candle, to indicate that basically the momentum to the upside could be over. This momentum was strong, really went up a lot considering the downtrend. Really made a good momentum to the upside actually, and considering the downtrend of course and the overextension on a lower time frame, I think that was a good short right at the trend line as well. Price action confirmation, and boom, took the short. As you can see, perhaps do you see it here, a red arrow, and I exited right here. And why I exited there, just kind of like as a caution, a precaution, because I was scared that there could be maybe a triangle, or there could be a bounce like this, and then move down again like that. And if there is a triangle like this, as you can see, then obviously I wouldn't get, well, not as much profit. Of course, the price would bounce back up. So I decided to be cautious with the TP and aim for a more conservative level like this. Now, of course, in retrospect, we can see the price went through that and continued. Sometimes, therefore, a trading stop loss is sometimes better. But okay, I was still happy with the plus 70 pips I made on this particular pair. All right, moving on. The next day, again, Admiral Markets webinar. On Wednesday, live webinar, I was looking at the Kiwi dollar and I saw a break like this. And well, I was advising that that could be a good breakout, but I still rather wait for a pullback. And I don't remember why, but I was said, okay, I'll wait for the 4-hour candle to pull back. This is the 5-minute chart. And then I'll wait for a 38 or 50 fib to re-enter with the stop loss above the top. So as you can see here, that's what I did. Entered at the 38.2 fib, stop loss there. Price went against me a bit, but then did fall, and we got the continuation and right to the minus 272 target, which was where I was aiming for. So that was a good trade as well in the Admiral Markets webinar. And if you're curious about those webinars, you can join by going to this link, admiralmarkets.com/education/webinars. Just click on this education tab right there, and you can see the upcoming webinar schedule. Also, please check out Admiral Markets Supreme Edition for the MT4 with 60 extra features. There's a lot of things that make trading a lot easier. And also, Admiral Markets has a web trader. No software needed. You can just trade from your browser. All right, some other setups this week. These setups are not pullback. As you can see, the last two setups were pullbacks. These are breakout trades, in fact, using our Accu Pivot Point strategy, which has been released this week. So perhaps you're interested in that. But first of all, some trades explaining what we did here. You can see Euro-Yen. Mind you, though, that the template you see here is not from the Accu Pivot Point strategy itself, but it's just a standard template I use for a different strategy. The Accu Pivot Point strategy is something we don't share through screenshots. So we took a short here on the break of this support trend line on the Euro-Yen. As you can see, roughly the Accu Pivot Point had a similar setup. As you can see, took the entry right there and took profit a bit lower. Classical break of a triangle 2 with impulse prior to that, right? So pretty clean setups here, pretty nice setups. Pound Yen, same thing actually, same point, same triangle, plus 41 pips. Dollar Yen, basically triangle break as well. Good momentum to the downside, plus 30 pips. Classical momentum, correction momentum. And then the Pound Yen again, plus 54 pips. And it went actually a bit longer and further than that, but okay. Took 54. And here too, a nice clean setup in. That's the great thing with the Accu Pivot Point strategy. We use accurate pivot points, obviously. We use moving averages as well, but we also use a multiple time frame indicator that looks at the 1 hour and 4 hour chart. So you get an instant view when looking at the 5-minute chart of the trend on the hourly and 4 hour, on the higher time frame. So you can really have a good 360-degree view about whether you're trading with the trend. The accurate pivot point strategy heavily focuses on trading with the trend and looks for a breakout on the 5-minute chart with that trend. So it's a very simple and sweet strategy, I think. And if you're interested in that, perhaps you are, take a look at this link, elitecurrency.com/accurate pivot points. Many traders have already shown their interest because of the discount, 500 euros less than normal. So this special price, at least valid to January the 31st. So thank you so much for taking a look at this video. If you're interested in opening an account with Admiral Markets, you can do so through admiralmarkets.com or through this link. If you do it through our link, you also get a moving average course for free, and you get credit for our website as you trade for your volume. Wish you all good trading, and see you soon. Cheers.